Tesla giving a much-needed tune-up to how it repairs to its first car. The company sent an email to Roadster owners saying they will now get their own dedicated service advisors, technicians, and repair centers. Tesla has not made Roadsters since 2012. The company no longer makes spare parts for the car. CNBC.com's Laura Kolodny first broke the story and joins us now with more for reporting. So, Laura, what exactly do those owners get?
So now that Tesla has been mass manufacturing vehicles, the Roadster owners, the original customers, have been feeling a little neglected. And Jerome Gielen, the president of automotive at Tesla, has reached out to assure them that they will have their own dedicated service. Just light on the details. What they have right now amounts to an inbox, but there were promises of dedicated technicians who have, specialized skills and their own repair centers.
Is there any sign that this might be extended to owners of other models?
Tesla has been grappling to master service as it scales. They're, sort of like a teenager. They used to have the infinite patience of their customers. Now their cars have been out for longer, some are out of warranty, and they own the dealerships, or Tesla doesn't call them dealerships. So it's been a real struggle. I wouldn't say that this kind of special attention should be seen again. I mean, ostensibly, any service center ought to be able to handle any car that comes in, whether it's a newer Model S, Model 3, one of the forthcoming vehicles. This really felt like outreach appreciation to encourage those, old advocates for electric cars and for Tesla to still feel good about the company and to feel reassured.
Hey, Laura, it's Tim. How much of this is driven by broader service issues for the entire fleet? Because one of the things that seems to be a news point out there is that as the company has been going through this pullback in CapEx and all expenses, you've seen it in the service quality. And so is this placating a smaller group of folks at, again, light on details is what I heard you say?
I think that's exactly right. They haven't increased CapEx, and they haven't created the number of additional service centers you would think to handle the entire fleet, especially considering the success of the Model 3 and the international expansion. So to me, this sounded like a way to keep loyal customers loyal. In this email that we received from, these owners who are really excited about it, Jerome also said, hey, if you want to trade in your old Roadster, you can put the value towards a newer Tesla or one of the forthcoming next-gen Roadsters, which look pretty fast and beautiful, but who knows when they're coming to market exactly. I don't think Tesla has really mastered service yet, but it's trying. This is the idea that they're aware of it, and at least they're being level about that.
Yeah, one of the things that goes along with the way they've decided to organize their distribution and business model. Laura, great story. Thank you. Be sure to check out Laura's full story on CNBC.com. Let's trade this. I don't know. What is the thinking on Tesla around the table? I assume you guys have long-standing feuds.
I have a short in the name. My view is that the profitability that the company showed is something we need to see in a sustainable. That is the issue with the company. The issue is not whether it's an auto company. The issue is not big data. The issue is whether the company truly has the ability to be free cash flow positive in an environment where I don't know that their funding opportunities are what they used to be.
I look at this company a little bit different than Tim, and I've been more bullish than bearish on the name. But I think after the run that it's had, I'm not really ready to still be in there. We talked last night. I was in this stock for a while for a nice run to the upside. It's run another $70 to the upside. I just can't see it right now, Carl, and I'd use options one way or the other, whether or not somebody's bullish or bearish. That's the only way to trade this thing right now, because when you look at it, to short, it's going to cost you a lot of money to short the stock. And if you want to go long the stock, you're looking at a stock that was $180 not that long ago that now is trading just under $350.
Define your risk. Yeah. This business stock, just in a handful of months, it was up 80 to 100%, depending on where you look at it from. But the relative strength index, it was overbought. It worked it off pretty quickly, yes. And it's found support around that 327, 328 level. So if you're going to play it long, you got to keep it on a very, very tight leash. But this thing trades in momentum. So as quick as it went up, it can come back in. If it breaks that 328, it's going down at a deep discount.
I did notice this morning sitting up their target to 222 from 191. So there's still some non-believers out there.
They still might be right. Listen, I know we got to go quick here, but 180 in June, 360 a couple weeks ago. Rarely do you see a stock move like it did in October from 250 to 325 in a straight line without at some point retesting that. I think 270 is in the crosshairs here.